Hey everybody, DayTraderRockStar here, and there's going to be a series of a couple videos I'm going to try to get out tonight, and I also try to get on the air later tonight. It's about 9:30. I should be on the air and right after this video on DayTraderRadio.com. So if you want to listen to a live show, I'm just going to be doing some charting and some trading. DayTraderRockStar is the host of DayTraderRadio.com, an online broadcasting show. We broadcast the markets, live trading. Huge community of traders, chat rooms, alerts, live news, a beautiful dashboard. You can just head over to DayTraderRadio.com and check it out if you want to see everything about it. But my job today is to talk about the markets because, boy, what do we have? We had a great reversal today. A great, big reversal. Huge reversal. Bigly. And, it was curious to see how it was going to end. It was curious to see how it was going to start with the CPI coming in, and we sold off, and it had most of the characteristics of a capitulation. A capitulation is where we kind of flush out, take out the lows, take out the weak hands, and then reverse and close higher on extreme volume. Now, the extreme volume wasn't there, but we did have increased volume. I mean, that's a big positive for me. So we're just going to go over, and I'm going to give you my thoughts on the markets. Now, I've been in the markets since 1996, 26 years, right? Or I don't even know how I even figured that out, maybe even more. But really a full-time trader since then, but really understanding trading and really being profitable probably after the 2000 crash, because everyone had to deal with the tech bubble, and we've never experienced that before. And, we had to go through 2008, which actually the 2008 market, the banking crisis, we did quite well. Day Trading Radio started in 2007. We've been broadcasting since every single day. I get up in the markets 7:30 in the morning. We're trading pre-market stocks, futures, options, everything that you need. So, like I said, head over there. Definitely, if you find this video, want to put a like on it. I'm supposed to say that, right? I'm not a big social media guy, so it's all grassroots here at Day Trading Radio. We have quite a large reach and a footprint in the financial markets, even though we've done it our own way. And if you know Day Trading Radio, you know what I mean about that. We don't conform to anybody. All right, so let's get to the good stuff. S&P 500, huge candle today. The big question is, was this capitulation? Was this a bottom? I would say most people are going to say, no, it's not. And I understand that. It's very hard to predict that. Actually, I'm not going to predict that because that's not something we can predict. We can look at some of the signals, but if people tell you they can predict this or making calls and stuff, that's all BS. It really is. It really is. The only thing we know, and what I know, is what I could look back and how other things, what capitulation looks like and give you some of the signs of that. I don't know what the news is going to be tomorrow. I don't know what's going to drop tomorrow, what's going to hit the market. We have a lot of earnings tomorrow. JP Morgan, Jamie Dimon's going to be speaking. Jamie Dimon spoke over the last week. Normally he'll come out during his earnings and, discuss the outlook, the economy and stuff, and that was going to be interesting. But he was pretty much on radio, TV, pretty much all week and talking about another possibly 20% move down or, some kind of crazy number like that. Brings us down under 3,000, 2,800 area, and he could see that. And, everyone's saying we could, or possible, or, something like that. Everyone plays defense during this time. I'm not going to play defense. But I am going to tell you, I did call a 1,000-point rally today. I kind of did call a 1,000-point rally early in the day as we closed strong. And when we close strong like this, and I'm proud of our group of traders, because we're involved in the markets, and when you're involved in the market so much as a real trader is, some people are going to come by, they're part-time traders, they want to get into trading, but they just don't dedicate the time. Find someone who's involved in the market constantly, not a part-time trader. You start to feel the rhythm of the market. You understand? Every day you get in, excuse me, you get in, you watch how the market pops, and then the sellers come in, and you see trends like that happen, and that happens at certain times, and then you also see certain things happen at the end of the day, and these are things that you have to be in tune with. So let's just get to the good part here. Big candlestick. The last time we had a candlestick like this, and was probably back here in February. And you could see back here in February, we're pretty much on what we call a 1, 2, 3 pattern, but the pattern really wasn't formed yet. Right here, that was our third pivot. And then we can make, if you know the HPF methodology, 1, 2, 3 pattern could be found as a definite. I have a lot of videos on it, so check out the YouTube channel and do a search for 1, 2, 3 pattern. And it's basically identifying a channel before a channel happens. So we determined back here in January 22 a nice high, a nice low, and then when we put in this low, we have 2 major pivots and we only have 1 pivot up here, but that's okay. So what we want to do is drop a channel line, or it's going to be a trend line, 2 points, 2 pivots, make a line. So you draw it right there, and then you take that and you make a parallel line off of it. I always just create a parallel line, and I lay it on top of the main pivot. So I just lay it there, just like up there at the top pivot. So we had 1, 2, 3, and we already have a channel. The market's not even at this point yet in the channel. Let me see if I could actually kind of give you I don't want to waste too much time on this video. I just want to go over the things. But here we have that 1, 2, 3 pattern. So my job is, with the HPS setups and stuff, is kind of to, let me see if I could get this to go tick by tick without messing up here. I don't know. We'll see. It's going to go up. Yeah, you see what's going on here. We're going up into that level, and we kind of busted through it a little bit, and that's okay. Markets tend to break through certain levels, but as long as we come back and retest them, they hold up really well. So you can see that is basically what happened. Now, if we zoom out a little bit further and go out, you'll see the history of this. And we came back down. We kind of retested that line. As we get rid of that line now, that's because I put it up here, and you can see we got through it. We gapped up above it, then came down through it and then kind of tagged it again and then failed and came all the way down. Then we came up here and kind of tagged it one more time and then failed. And we got all the way back down here, and what happened at this point, we kind of busted through it a little, came back, then we came back and tested again, but you can see the closing price is right around there. Right around the closing price where these candles are closing, or right in that area. So I keep that channel line there, and even if we violate it down the road, I always want to keep it handy because I'll trade off of that line multiple times, and that's what is special, because we know about, most people don't know that trick. They'll forget about a trend line even if they see a little candle going through it. Now in this pattern right here, we have a beautiful divergence. There's a low and there's a lower low, and you know me, and I tell you, when you see a divergence like this, you got to take it. That's why you come into work each day. And that's what I'm taking every day. And that's a different story altogether. But that type of divergence back in May was a great little move. And the divergence is going to move whatever time frame. I might be going real fast today because I'm trying to get this video out. But whatever time frame you're trading, that divergence will give you a move, typically 5 to 7 candles. So if you're talking the daily candles, you're talking 5 to 7 day rally. Possibly more, depending on how the bigger time frames are lining up. And in this case, the weekly would be the next one we look at, and that was probably doing pretty good itself. So anyway, that was a 5 to 7 day rotation. We got overbought, and these are based off of stochastics. And again, if you don't know much about stochastics, head over to Day Trading Radio. I have a great introductory little free course there to kind of get you involved with stochastics. But that next video, I'm actually starting a class, a Tuesday night class, teaching that live. So keep an eye out for that. That's going to start happening next week. Tuesday night live class teaching stochastics. You'll see the video coming up. So we actually got through there. We probably took a trade back here in July. That's where the market actually started to give us that beautiful rally back in July. And from that point on, we got a little through here, and then we gapped down. Look how we came back and retested it. So this old trend line, even though we break through it, the algorithms like to break through, test, drive some prices higher, but they tend to come back into the original pattern and then move back up and then hold it and then come down. So look where we're at. We're all the way back down to the lower channel. We bounce off of it. We get a nice gap up. People think, oh, this is it. 3 days consolidation. We actually have another 1, 2, 3 pattern. Extend that line off of 2 trend lines here. And you can see we pushed up to it and we failed. and then we came down, we held it, we capitulated under it with volume today, and we closed back above it. Stochastics, key. Nice turn up, aggressive turn up. I call it the Nike check mark when you have a nice angle there. That's very bullish for a follow-through day. So there's, mark that in the follow-through day. Mark the candlestick as a follow-through, pluses and minuses on these things are very important. We put the cons and pluses on what we think the market's going to do tomorrow. A lot of these are on the plus side that we're going to continue to see some follow-through on that. We have volume, we have a reversal, we have trend lines, we have the Nike check mark, shifted momentum. We even have a weekly candle that's starting to turn back up. So, yeah, I understand why a lot of people are saying, we don't believe this, because they've gotten fooled. You got fooled here, you got fooled here. It makes, the odds are you're going to get fooled here. Everyone's still negative. But I want to say that this is going to hold up. That's my take on it, just because I'm weighing the positives and the negatives. Now, of course, if China goes after Taiwan, nukes come into the picture or anything like that, the market's going to consider that another event, another black swan event that it's not prepared for. I think the inflation thing, we've talked about it enough. We know enough about it that it's probably starting to get priced in. We know it's going to be around here for a while, but people are starting to say, "Hey, we're not going to get back down to 2%." They're going to adjust these numbers, and we're going to live, and we're going to go on, and things are going to be fine. We're going to adjust to them. Wages are going to go higher. People are going to just pay, and people are still paying. So, this might all be. It doesn't look good. It doesn't look good. There's really everyone's really hyping it up, but. Is it really a major issue? They keep on saying recession. We're going to come into a recession, but why aren't we in a recession? Everyone thinks we're in a recession. Things are bad now. They said things are bad. Why aren't we in a recession? I was at the mall yesterday. It was packed. I had to park in a different parking lot and hike there, hitchhike to the mall. Anyway, the divergences, which is not a divergence, but let's go on the weekly chart for a second. The weekly chart has a big candle, and tomorrow we end off the week with a Friday, and we'll see if that's actually going to be. Now, you see I have a 3664 level here. That's, I think I was looking for this as worst case scenario. If we were looking for a move down, I would be watching that 3364, and that's what I call the mulligan trade. That brings us back to pre-pandemic highs. Before the pandemic hit, that's where the highs were. So that kind of cancels everything. It gives back everything from the pandemic. It's just a big do-over, a mulligan, you might say. One more note on that weekly chart. Again, a large 1, 2, 3 pattern. You can see the confirmation of that top trend line. If we drop that parallel trend line all the way down to the last pivot here, then we have a huge channel. Well, I was looking at the markets before, and we were down a little, about 3 points. All of a sudden here, market has just taken off. 21:30. Oh, actually, what time is it right now? It's about 9:49. So that's interesting. Again, news is going to rule this market here going forward. But news on inflation might not be the one that really moves it. I think from that point, I think we could actually rally on that. Any bad news, again, all bets are off. Any new bad news other than the issues we have. But here's the MES, and this is how we profit during the day. And today was another great day. I mean, even though we caught the first trade of the day was the best trade of the day. It was. Let's go back here and actually go all the way to the beginning of the day. Let's see where are we here. I'm gonna have to push forward there, and then we're gonna go. Big range today. We went about 1,400 points on the Dow. On the Dow about 4. So here's 9:30. At 9:30 we had a divergence of all divergences. You see this nice low here, and then we took this low right here. We dropped down, but look how high the divergence was here. This was really key, and I ended up taking this. I have one contract on it. It was nothing, basically. It was nothing. It was, it was very volatile. I didn't want to know. Got like 4 points on it. What do we get on it? 4. Did we get this 4 points? Well, this is actually, I'm running the script on this, so that's not my trade. I would have to switch over to look at my trade. I would have to disengage the strategy. I actually have the strategy running here on this chart, so I'd have to disengage the strategy here. Let me do that right now. There, I just disengage the strategy now. Now it should show my trades from today. That froze up a little. Don't want to waste too much. This is already getting too far of a video that I wanted to go into. I had to fix the log on here. Anyway, I put the script back on here because I'm going to be running the script tonight. And anyway, that first trade of the day was a beautiful divergence. And you can see the overnight trade. And the divergence is going to be picked up by the rock bot. So if you're I definitely recommend everyone who's on the site just to kind of keep that rock bot on their screens, because it nailed the first divergence right here. Basically, I got 4 points. I held it a little bit longer. I got in it early because I could see it right here forming around that candle. So I got in a little bit earlier than the bot did. This is the picture of the bot. But actually, if we would have stayed in there, it would have been, heroes. But we got it really early. I think I got 4 points on that. The market rallied all day. And looking back, there was a couple bull flags, and we could start to see that strength coming into it. And I had very, especially, not looking at any shorts today, but there was probably a couple short opportunities, but not many. You always want to look for these pullbacks in a very strong market and look for those divergence into it. And we did have that divergence here and another divergence here, and they were kind of sideways, not giving you a lot there. Here was actually a little chop. And then here we got a little first profit. It hit the first profit and trailing stop. So it was very quick in this chop. But the object of the thing here is to identify these bigger pullback channels. A nice channel like this, we look for that divergence here. All right, and that was a really good divergence. A nice pullback here. You can see that higher low, and we try to confirm this. Remember, the bot is trying to point these out to you so you're able to not miss them. The key is to be listening and let me analyze the setup, because I've seen the combination of these stochastics so many different times, and we know where strength comes in, and also the important levels of having a higher divergence turn up on the second stage. Remember, this is the first stage, that's the second stage, and you want to have that second stage a higher angle. The degree wants to be over 10%, and no one will ever tell you, like, wow, degrees and angles. Yeah, believe me, it is super important, and it really does describe some strength. And when you have the 60-10 pushing down, that's kind of a bigger trend to the downside, which we are trending downside. So when you have that going down, rule number 2, important super rule, is always take it off on the rotation, the 9-3 rotation above 80. I can't stress it anymore. You hear me say it in every video. In this environment, when things are so steady, especially on the long side, your trades should be taken on a divergence. The steeper the better, and you should be getting out, or at least taking majority of profits on the first rotation of back above 80. Once you get back above 80, you should be taking profits. All right, because the majority of the time it's going to roll back over and it's going to continue with the trend. So that was, and look at us now here. We're up 23 points. We'll see what, call. I didn't realize that we were going to move. Like I said at the beginning of this video, we were just kind of flat down about 3 points, and now we're up 23. So things could turn around big and follow through tomorrow. And then it's going to be interesting to see at what point, I always say, at what point do we start to see the rhetoric, the people talking about more lows coming in? When do they capitulate and say, I believe the lows are in? Is it going to be up here? Because once we start to rally, and if we do rally, we get up to the 50 and we get up to the 4,000, right? I can tell you right now, people will say 4,000 is doable. 4,000 to 4,100 is doable. And I totally agree with that. I totally agree with that, because guess what? They must have been watching the show. That's exactly where my trend line goes, right to that 4,100 level. So that would, that would hit everyone's thesis, and that would be an excellent place to look to sell. Now, what happens if we break through that? That would be a tremendous breakout. So we got to turn up here. We got the weekly. Do we get a big rally here up to 4,000? There is a possibility. There is definitely a possibility of that happening. I'm not a big, everyone talking about midterm elections and how that's going to play a part. I kind of gave up on that. I'm not falling for that. But I am liking the move up to the 4,000. This trend line here. I think that's an important trend line. Again, tomorrow will be key. Banks will be out early tomorrow morning, around 7:30. We got J.P. Morgan. We got Bank of America. I believe we got Citigroup. We've got some other ones that will be coming out. So we have a lot of interesting things tomorrow. We'll be there bright and early, daytradingradio.com, and hope to see you there. Head over to the site. There's a 10-day trial. You could get in. There's no fee or no credit cards required. You just give us a username and password. We'll send you back the link, and you can get in and trade with us all day long, and you can get that for 10 days. So check that out also. I'll see you guys in the market. Have a good night, and I'm going live right now. So if you get this, it might be an interesting evening right now.